Yeah, there's a lot, and there are a lot of rewards, and especially now you've been there for years. You've seen businesses and developments around town that like still exist and still doing well, and we were the first ones to finance them.
Yep, that's cool.
That's great.
That's really
we
cool.
see
Actually,
a lot of them
you
downtown.
one of those recently,
and we can't. And then. And so seeing that, over the years, I mean, we've probably financed, nearly every building downtown over the years and things. So
that's so cool.
Yeah. And business start out and things. So that's pretty cool.
Well, I think a good place to start to run this experiment is just a real conversation. I think that a lot of people would love to know what goes on in your life, in your world as CEO of Surety Bank. I mean, I know you really well because we've worked together for a long time. But if I were on the outside, I have to imagine, just like I see other people that I don't know, right, or of certain stature or certain positions that I'm intrigued by. I think there's a lot of people out there would be just curious to know, like, there's a guy that's down the street running a bank that I could put my money there and I could have a relationship with his team and all that. How does he think about the world? How does he think about life and work, like as a CEO? Because it's going to resonate with people who are running businesses.
No. And it's kind of, I would say it changes as you've been in a role too, and evolved. Because now I've been in CEO 2009, so 15 years. Yeah. And so kind of what I thought then was, completely different now.
Yeah. I mean, you started in the trial by fire.
Yeah, but, right before that, I didn't think it was the fire.
Sure.
I thought, but it went through that. But as 15 years has gone by, I think the mounting of responsibility, like I thought I had responsibility 15 years ago starting it, but the weight of responsibility actually increases for me. It has over time. Like you have more of an awareness of
it. Yeah.
Yes. That how your actions, your decisions, your indecisions, timing, affects so many, especially in the banking level, because it not only decisions could affect, staff, then the decisions affect your customers. And when it affects your customers, whether they're personal businesses, that is also an effect that could affect their customers.
Right.
And so kind of goes on.
Yeah.
And so that weight continues to build, and we're in this, 100% pretty much digital world, there's, anything can happen. So,
that's true.
Weight of responsibility continues to increase. And so the past few years really, outside threats of just maintaining a business, because it's one thing a business can start and, you see the future of banking. We still need banks. So the future of banking for at least near future is, still fantastic. But things change, and we're kind of at a period of time we were, and I think things will change for the better. But it's just, we've had now years of banking. We've got so much red tape.
Yeah.
We've got so much compliance, and there should be a lot of compliance in the banking because we're in control of people's money. They're insured. But, there really needs to be an overhaul. There's a lot of misplaced. So, I kind of revolve. So, definitely responsibilities increase, although dealing with it, deal with that much better than a prior. Thankfully, 15 years ago, if I realized what responsibility it was and decisions, and because you're not, and especially when you're dealing in a recession. I'm always thinking of the future recession. When someone's business, they're defaulting on the mortgage. That's a big deal,
right?
Well, you've also it's a business that goes through. So preemptively, I've gone through that. So I don't want to go through there and have these conversations with people, but what the public is alive is what seems like a logical step. You also have bureaucratic, BS on the other end that can conflict what you would want to do for a customer. There's always a double-edged sword. Everything you do.
Well, so I'm curious though, like going back to like the increased awareness of responsibility. First of all, the responsibility has increased in part because you've grown the bank immensely.
Yeah.
So you've created new responsibility that wasn't there before because the bank is bigger and doing a lot more things and is more profitable, et cetera. But how much of your increased awareness of the responsibility and the things that you're
because
overseeing,
everybody's so focused on like the big issues when it comes to risk. Let's take data security or hacking. Everybody's so focused on big things, but it's always the tiniest little thread that gets you. And so no matter what, you can never be too diligent. And it's, people always assume like you can never mitigate risk. You have to be prepared for when it does happen. And so, the mindset is kind of changed. Like, I'm not surprised when something happens because inevitably it's going to happen. If you have a 1% chance of a default, that means it's going to happen within your career.
Yeah.
It is going to.
Right.
Hands down. Because what you don't realize, they think 1%, well, it's going to happen 1 out of 100 years. No.
Yeah.
Every single second is a 1%. So compounded, anytime there's a risk of a 1% chance of happening, just full on agree, it's going to happen.
Right.
So go ahead and prepare for it. So that has been, the big push in years past.
I just wonder how much of that awareness factor, because it's sort of not necessarily a conscious thing that you're consciously becoming aware every year. But
too, it's kind of aware too, because as I've grown in career and how I've also moved up and talked to what seemingly when I'm at a small institution, and then I go up and I'm speaking to now people are in roles of major institution.
Yeah.
5 billion in assets, 10 billion and 20 billion in assets. What scares me a lot of times when I'm in conversations with them and I think they know what's going on and I realize there's a subject that I'm more of an expert on.
Yeah.
Kind of scares.
You've taken a deeper look
so
at
it's,
stuff,
I forget what law it is, but the higher you go up in it doesn't matter. It is completely.
The more disconnected you get from reality.
Correct.
Yeah. In various forms. I see that a lot.
Yeah. So really that is the way. Same way in the government and, same thing. The higher up you get, the dumber the level of the IQ is diminished.
Yeah.
And it just, and it happens, I think it's in the board with all industries too. So any major industry that's complicated, you start going up, that is that. And so that has been really sobering over the last
I was
few
talking
years
to somebody
of seeing that.
yesterday.
And it's constant frustration to where you were like, okay, where you're seeking, all right, I'm trying to be a craft at my trade. And, you always seek to, okay, they're on this level, we can do this. Oh no, that's the worst place to get advice.
Yeah.
Now there's some great ones in there, but in general, vast majority of them.
Yeah.
No.
I think that the higher you go up that top of the pyramid, you end up with a lot of intellectualism, versus living in reality. Where
they don't get anything done. They end up like, let's do a study on a podcast.
Yeah.
Should we do a study and is that going to be a market instead of just doing it?
Yeah. That's where the consultants come in, which is crazy because it's like you can't even think for yourself now. You're having consultants tell you and still not going to do anything.
Yeah. And the consultants, they have not spoken to your customers. Right. They haven't been there at the time. They only looking at like numbers and what's there. They're not looking at everything that's not written down. And let's face it.
Yeah.
Do people write down everything that really happens? No. So, consultant is, where is their viewpoint? Unless they've set at your organization and are following through everything. I mean, and it's that precise trade, you've got to rely on yourself, I think, for that.
Yeah. It's a consultant can be a productive tool if used properly, but I think in large part, people don't understand how to use the tool.
Don't think it's going to come in and just replace it. Like if you've been in there and your customers and you've heard things, that's going to play.
You guys have built, you've built a pretty substantial BSA department. Fraud, you deal with a lot of fraud, and it's become a prominent piece of what you guys are doing here. Do you think that came out of that increased awareness over time that you had about responsibility?
Part of it was, of course, born out of necessity, because when you're a smaller bank and you're audited, they all come in samples. So typically at a bank, you have they come every 18 months to audit you between your major regulators. they typically are spending roughly the same amount of time physically at your branch, at your bank as a larger bank. There's still a time frame. It's every 18 months for my size or 20 times my size. That makes a difference. So that is very exhausting because when they come in and sample, they're looking at so much more. So you have to be more on point. So they may sample us during that time period and may look at 80% of the loans. And each loan may have, 50 things within that loan file of exceptions, things that you have to check off. Well, you're going to sample us, you're going to get a grading sample of. There's a greater chance that there may be an error than if you're sampling a large bank and they've got 10,000 loans to, 400
in total. Yeah.
300, so they're going to look at that. So it's a lot easier for them to really, if there's one out of, if we have one error out of 10,000, it's easier for them to find than at a big bank that has one error out of 300, if it makes sense, because their sampling size is that.
Yeah, much bigger.
Correct. And no matter how good you are, there may be, an error, here and there. So that's the part that you have to be better. So when I was building compliance, that I knew that, I just cannot do the bare minimum because it's always, well, what about this? Well, what about this? They always want to come in and be Monday morning quarterbacks. So if you're like, okay, here is the level, we're already up here. We're doing this, then
to
that was
solidifying. You're almost
giving
them the guidebook.
Yeah. Like, okay, the level says we're doing this. So, but we're enhancing and we're going beyond here and we're doing it this level. So don't come back here, and complain that we aren't doing enough. So that really was it. And then as you're doing it, then you build it into practice. All right. How much times is we on? How efficient can we get it? Are we looking at the right alerts? You have to really kind of tailor it.
I think there's a lot of wisdom in this conversation to pull out for a second that the average business owner listening to this doesn't have the layer of compliance. First of all, a layer of compliance that you have to deal with, but they don't have it to the extent, even if they have it, that you have to deal with.
Oh, it's probably anywhere from 60% of our time is dealt with compliance and like answering compliance. And when you have great we have good audits.
Here's the wisdom is, first of all, if you're listening to this, be grateful that you don't have that.
No.
And that you have almost 0% of your time related to compliance. But even though 60% of your time is dedicated to
I don't know how
compliance,
the average bank makes any money because of the amount of extra compliance, because in between also that year and a half, you have your own internal audits.
Yes.
So if a bigger bank may have their own employees that are typically, maybe they got a law degree, they're not a practicing attorney, maybe they got a law degree, head of compliance, and so you have your own audit group. I bet everybody probably hates them in that organization, but you have that audit group that goes around, and you're doing your internal, but it's necessary. It's necessary.
Yeah.
And then you have a hire out. So, constantly they're having to check and vet you. And so,
but I think that fact that you have so much time dedicated to this and you've decided to take it to the next level of essentially leading compliance.
Yeah.
But
it's scary. I hate saying that leading compliance because it's always that's
what I'm saying.
You're never perfect. So
but you've leaned into it heavily, even though it already takes 60% of your time.
I think you have to do enough because like I said, everybody based on risk. Oh, there's a 1% chance of something happening. It's going to happen.
Yeah.
So you got to do enough to when that 1% happens. Yeah. Did you catch it after the fact? Did you go back? Was it material? Look at it, mitigate it.
Yeah. I think for businesses who don't have that layer, find your Achilles heel and lean into it.
Because I'm looking at things completely different than my staff. They may be like,
right. All those vantage points are important. So now that you're, many years, 2 decades almost into your role, and the bank is on nearing 100 years old. I think we're hitting 99 this year.
And what, in 2026? So 99, 2005,
So
25.
Got a lot of milestones here. What are some of the big things that come to mind that you can, almost like tenets of growth, things that you can look back and what you've done in this role to say it's formed you as a person, as a CEO?
One thing in the bank industry, you know, sometimes you can't do everything you want to do at that time because you are touching people's money. You do have that. There's not a whole lot of room for error.
Yeah.
You know, you can't make a mistake and your customer doesn't have access to funds for weeks and months. Like that's completely not acceptable.
Yeah. The error rate has to be really low.
Correct. So there is a slow bar of like, you know, continually adding new things. So that is, go back to the, you know, what was there?
Well, we'll talk about like tenets of growth. Like,
so
what have you learned? I mean,
the foundation. So getting things done as much as you can the first time to where you don't have to keep redoing it.
Yeah.
Getting that foundation makes
like
a huge difference. You've got to get as much systematic and foundations. And then you realize over time, and some things may only take 5 years, some may 10 years. You have to go back and look at your foundation and reinforce.
Yeah.
And sometimes you got to get a new foundation or reinforce.
Yeah. Right.
But especially in a highly compliant area, you've got to have a strong foundation.
Yeah.
Because in banking, if you want to, you know, everybody talks about scale.
Yeah.
Well, what scale? So yes, you could scale and everything automated is going to, you know, go back and forth. But what happens if the automation fails? At some point, automation does fail for a day. It may fail an hour. There's maintenances. Let's be real. Every, you know, major financial institution has had some type of like block. You know, when that fails, if you want to scale and you have less customers, but now you've got, you know, 30,000 individual customers, but you're still a small bank.
Yeah.
You know, how are you going to take care of those peaks when there is a large call demand?
Yeah.
I mean, so how are you going to handle that?
Right.
So, you know, banks that, you know, they so badly want to scale, they got to make sure their foundation can hit that level because it will happen where just one little thing happens. You could have an update on your app and you had your quality control and you verified it and you caught something and, you know, it's fixed, but then you go back and double check and it was correct. And then later somebody's calling you up and the error that you said corrected is wrong, but hey, they updated in Android, but did not update in iOS, but you caught Android. So there's never enough. And it's always the simplest thing. Well, that could be out for, I don't know, a day. And then you've got to call log. So, you know, you've got to get foundation. You just got to prepare that the unexpected things are always going to happen.
I like that. And that's very unique to you and your culture and the way you operate. I agree. How does that translate to like your typical business owner outside that doesn't run a bank? When you talk about foundation, like what would you say to because you talk to a lot of business owners, you look at a lot of financials. I mean, you're very immersed in how small businesses operate and what makes them successful and not. So, you know, what would be, because it's going to be in
and I think for that culture, it's there sometimes not to get too ahead of yourself. You know, I think they always focus on, hey, I've got these sales. Yeah. Great. And, you know, they spend the money quick before they, you know, truly paid off their costs associated with that product. Yeah. You know, I think that is having that good foundation of just
trying to move ahead before you have settled your sort of reconciled or settled your debts. I don't know, that's probably a better way to say it, but moving too fast with cash.
Because, you know, in banking, growth is a bad thing. It can be a horrible thing if you're not prepared for it.
Yeah. Interesting. Okay. Because, I mean, and that resonates for people who have inventory, products, and people who are selling services as well.
I mean just think about it. If little banks like they had a, you know, I don't know, some catch, and they want to advertise on a national level, and they're posting new account. You can open up new account online. We're going to pay you 2 days early payroll. There are going to be a lot of applications probably online.
Yeah.
A lot of them fraud. You better be ready for that.
Yeah. Okay. Yeah, that's good. I think it changes a little bit by culture in product and industry, but for the most part, you know, foundationally cash flow.
Yeah.
So if we
that's what you see a lot of businesses.
If you dial into that a little bit, are you talking in the cash flow? Are you talking about reserves? Are you talking about low debt? Or, I mean, are there any specifics that you would call out of that from a foundational financial?
I like low debt, even a banker. I think everybody, I really am more on the side as, can you make money with low debt, no debt before it
if
ever
you can,
even
that's
scales?
great.
Yes.
Yeah.
In general,
And
you got to be very wise on
the debt you take has to help you make money.
Correct.
Yeah.
And, don't be taking on debt and realizing you're paying that over a longer period of time than what you're spending it.
Yeah. Yeah.
Those are kind of like the foundational principles, and then
Mm-hmm.
go from there.
Okay. I like that. How do you control growth if you're having rapid growth? Because I can see a problem would be hiring too fast, because you're paying salaries and stuff like that. You're having growth, hiring too fast. Maybe getting into too big of a space too quick.
Well, in this day and age, it depends on if you're, manufacturing or something. Then, if I don't know, I'm into the garage gym community, so I'm always looking at stuff like that.
Sure.
And I've kind of seen companies that they're offering something it's hot and everybody likes, and then people complain about it's taking me 18 weeks for delivery. I think for that case is you've just got to communicate, expectations right here and there up front as quickly as you can.
Yeah.
And then if you are paying for added, you got to be quick and cut back those additional ads. If you're not fulfilling those orders, just cut it back.
Yeah.
And then, start taking, requests. Somebody's going to be a lot more palatable, say, for the next tranche, you want to sign up here, we'll put you in line, as opposed to give me your money now and then 30 weeks later.
I like that. Yeah.
I think for that,
and that's
just
good for brand
communication
too, because you're building demand. Because not everybody gets everything they want right away.
Correct.
What about the reward that you've had come in your career, like in various forms? I think the personal reward that you've seen come from leading the bank and managing a team and growing assets and all the things you do. I mean, you're meeting with a lot of businesses. I see a great reward in that.
Yeah, there's a lot of rewards, and especially now you've been there for years. You've seen businesses and developments around town that like still exist and still doing well. And we were the first ones to finance them.
Yep. That's cool.
That's great.
That's really cool.
We see a lot of them downtown.
One of those recently,
and we can't. Yeah, and then and so seeing that over the years, I mean, Delaney, we've probably financed nearly every building downtown over the years and things. So
that's so cool.
Yeah, and a business start out and things. So that's pretty cool. And seeing customers that are in industries that like the service we're providing, they're able to sustain and not worry about a banking relationship and in an area that's high for maybe debanking.
Mm-hmm.
That's been rewarding too.
Mm-hmm. Yeah, well,
it's been very rewarding.
Explain that a little bit more. Like going into a niche or an industry where other bigger banks have said, we're not going to bank you anymore to these clients, and you saying, we'll bank you.
Yeah. And it's because at a local level, we, many years, 30 years ago, had customers that were, filling voids in communities that, people didn't have bank accounts and they would cash their checks.
Yeah.
And so, we've solved that over the years, and then our relationships built locally, and then that built over time. But that's, they have to have a license, they're state regulated. And then there's this, huge kind of push to demonize that industry. So then banks didn't, I don't want to provide services to it. And then it get nuanced. And, when things kind of get like that, you almost kind of can create a bad industry too, because there's great people in every industry. So, it was nice to be in the industry, provide banking services, and, here's our process that we're going to find good people within this industry. And no, you've got a place. And we're
because there's always bad actors, but I love that.
Yeah.
I think that's highly rewarding because you're able to give somebody something that they absolutely need, but then go beyond and give them a service that they weren't getting before. I mean, treat them like humans.
Yeah.
That's basically
what you're
doing.
Yeah. And there's a lot of, I think, things like that throughout the United States and the world in financial services, where there's these nuances that people don't, necessarily think of exist, but they need to exist. They need to help out that community. I see online, it was just yesterday, I know what name, somebody they were almost bashing check cashers or small payday lenders in their community. There's so many, and we have this wonderful online account that is, you get your funds 2 days earlier. And it's like, you don't really know your community. You're not even offering that short-term loan that they actually need right then and there if they need it. Like, that's where they exist. And now you come to usurious, like your model that you're doing as a banking, I know you're not going to make any money at that model. So, and now you're hooking them 2 days earlier. Like, you're not doing anything. Mm-hmm. You're not offering anything better.
Right. It's kind of a strong,
you're not there physically there, like they're there in face, okay. Electronic means like it was, they're existing because, they need it.
Yeah. Yeah. Well, anything else to say about your role as CEO and kind of how you think in that role, to wrap it up?
It's kind of, there's always, when you're an organization, there's certain departments in certain areas that, always maintain your time more than others. Mm-hmm. So, it changes quite frequently. Yeah. You really don't know sometimes, you've always got the main compliance, efficiencies, growth, but then, you've got human nature that comes in. So there's departments that ebb and flows, change in, and roles, change in lives of, individuals,
sure.
timing. Yeah. So, one thing that I love about being CEO is, I get back and forth and immersed in different departments, and
it's a living, breathing organism.
Yeah. So
keep it alive.
You have your plan for the week, but there's areas that you have to maintain your focus on, and back and forth. So it's,
but you enjoy that aspect.
I do.
It. Yeah.
I really do.
The color and variety of it.
No, it's wonderful. One day you're going over, commercial real estate loans, you're looking at large participations, and you're going through that, and then others compliance, regulatory. So it's jumping around in a lot of different departments, and so that's fun.
That's awesome.
Yeah.
All right, cool. This is a great chat. I think we should do more of this, or kind of a long form, just free flow, so it's not as scripted. But I think that's a great one. I agree. I think people want to know more about like how it works, or how you work, right? Because they're your ideas.
Yeah, and they change quite frequently.
That's right. Okay.
All right, thanks.
On to the next one.